Hello and welcome to KYC, a brand new show at NDTV Profit. And in this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of the company they invest in. KYC, Know Your Company, is a show designed to give regular investors powerful, actionable insights into fundamentals of a single NSE-listed company every day. And today, we are going to talk about KRN Heat Exchangers. Now, this is a recently listed company, and it's actually seen a strong showing, and perhaps for good reasons. And we'll talk about all of those aspects in just a bit. But let me start by taking a look at what, in fact, the company does. The company actually looks at, well, specializing in manufacturing in, your tube type heat exchangers, which means that it does cater to the heat industry in general, perhaps those who manufacture heaters as well as those who manufacture air conditioners. So heat ventilation, air conditioning and refrigeration industry are the three key focus areas for the company going forward. And the current production facility stands at around 1 billion units, and it's made its debut just back in the month of October of 2024. And since then, you know that, well, it's done rather well. Now, at least in terms of your revenue breakup, in terms of how products are distributed, about half of its revenues come from condenser coils. And that's followed by another, 40-odd% comes from evaporator coils, and all the balance you will see coming in from headers and coppers and street metals and all the other operating revenues. But in general and largely, as you can see, the bulk of the revenues come from condenser coils as well as evaporator coils. But let me stop there and perhaps get in my colleague Anushi into the conversation as well. What Anushi and I are going to talk about is essentially all the parameters in terms of the kind of ratings that we can give the company based on 6 essential heads. Firstly, we're going to talk about the income statement. We're going to talk about the balance sheet check, as well as the return ratios too. And besides that, we are going to talk about the cash flows, shareholding, as well as street cred. Unfortunately, we don't have too much to go in for when it comes to the street consensus because, well, it's a newly listed company. And for the same reason, we won't have an update as far as your dividends are concerned. But I reckon that even these 6 parameters are going to give you a comprehensive update on how the company has turned out and possibly also the reason why it's moved the way it has. So, Anushi, welcome to the show. Let's start off with how the revenue growth has been for the company as well as the profitability for KRN Heat Exchangers.
Agam, just by seeing the kind of street performance of this last 1 or 2 months itself, we can see that the investors in general, even the retail side, are very bullish on this counters. This can be reflected in their financials as well. We are seeing a 3-year revenue CAGR growth of 60% now. EBITDA also has seen about a 120% of a jump. The FY24 revenue stood at about 308 crore, but EBITDA stood at about 58 crore, and margins remained at around 18 to 19% of range. When we last spoke to them also, they expect their they started on a very stronger note, but they expect this momentum to carry on with H2 performance also in terms of margins and all, and the revenue metrics that we are seeing. Net profit, if you look at 39 crore of the FY24 was their net profit, in which they had clocked in about a 153% of a 3-year CAGR growth. So this is how the income statement check looks like, a big positive from all the key numbers that we are looking at.
Those are some staggering numbers. There's no doubt about that in terms of how things have panned out for the company over the course of the last 3 years. And, if you consider how things have panned out for the balance sheet, the picture is no different. In fact, it's on a very, very strong footing. Remember that this company is considered to be a capital goods company. So, one might expect a little bit of debt on the books considering the working capital requirements. But what's really surprising is that that's not come through. In fact, while the company has an equity shareholders value of around 500 odd crores, that's its net worth, its gross debt stands at around 50 crores. But against that, the company has cash reserves around 350 crores. So this is practically, no debt. And even if you consider just 50 odd crores on a gross debt basis, that is also negligible in comparison to the kind of traction that the company is getting. So on the balance sheet front as well, it certainly is a thumbs up. Very strong footing when it comes to the balance sheet. But, Anushi, we were talking about cash flows as well. There is some encouragement coming in here too.
Right. We are looking at some healthy cash flows also, while we are seeing what is happening over here. But I'll talk about the return ratios. You can take about the cash flows in one. Return on equity, if you look at, I'll take the FY24 numbers in picture. 41% of return on equity that the company had as of FY24 end. Return on capital employed was 31%. But do note that these are the FY24 numbers that we are looking at. Post the IPO, there has been a substantial change in their equity numbers. So we have to consider that. So strong numbers on ROE and ROC. But yeah, Agam, you were talking about the cash flow picture as well.
Absolutely. And cash flows have well improved over the past 1 year. We just have data of, what's happened in the previous financial year and what's happened now. And it does seem like we're looking at cash flows of around 34 odd crores against an outflow of around 6 odd crores, and this is of course year on year for the first 6 months of this financial year. So on an operational basis too, it does seem like it's on a stronger footing. But remember that we've seen a considerable improvement in the metrics of the company, which is explainable, and that's the reason why that is, as you can see there. Anushi, moving on to shareholding, how tightly is this company being held?
Very tightly held. In fact, 71% of stake remains with the promoters as we speak. So high promoter holding that we are looking at. Foreign institutions hold about 4.1%, while domestic institutions say about 7.4%. And with public, with the recently concluded IPO and all that, we are seeing a 18% of a stake here. So again, this is also a very strong indicator with the management remaining highly invested in the company as we speak.
And, that actually brings us back to how things have panned out for the stock since it's listed. So firstly, the stock has moved up around 81% since its listing back in October. So in about 1.5 months, it's moved up and zoomed up and nearly doubled. But, as Anushi and I have been talking about, these are the many reasons why you have seen so much growth. And, the valuation picture is always going to be a little bit of a question mark. We don't have too much to go in for when it comes to dividends. We will know that in time. But I reckon that because the fact this company is in the growth phase, well, we may not expect too much in terms of dividend. That said, it's throwing up a lot of cash. So, I may even be wrong in that assessment. But overall, at least as far as your statements are concerned, it's on a very strong footing right now, and which is why we're rating this company 6 out of 6 parameters that we are discussing on KRN Heat Exchanger. So, one of the better IPOs to come about as far as the primary market is concerned. With that total score, with that perfect score of 6 out of 6, let's also talk a little bit about the strengths and the weaknesses of the company. So I'm going to talk about strengths and weaknesses. In terms of the strengths, of course, we have a long-standing business relationships as far as KRN is concerned, along with something like a Daikin, a Schneider Electric, also something like Kirloskar, Chillers and Blue Star. And these are all very well-established companies, So, well, they have partnerships with companies which also have a fundamental strong footing. Also, moving on, we have in terms of financial performance, where we've seen how things panned out, and the question is that the expectation of sustenance of margins, their operating margins, could only boost the company further. In terms of weakness, well, there are no long-term agreements with any of their clients or customers, but and their imports have accounted for as much as 78% of the raw materials. So they are dependent a lot in terms of their RM costs, and that could see a lot of fluctuation given the kind of traction that we've seen. As an example would be the kind of traction that you've seen in the metal sector on account of China and the kind of implications that it has had with respect to raw materials. And it relies heavily on Malaysia and Vietnam as well for several other raw materials. So that potentially could be a weakness. But Anushi, moving on to opportunities and threats.
So Agam, the biggest opportunity for this company is its subsidiary KRN HVAC Products, which has signed a 1,000 crore MOU with the Rajasthan government. While this is one of the pegs of the company's growth going forward, if we look at the capacity in this is set to expand by around 6 times by April 2025, which will take another to quarters to then stabilize, and from second quarter of next year, that is FY26, we can expect a strong set of revenue growth with the additional capacities flowing in. So just to give a picture on that, capacities which will in the next 3 years, their target is to take those capacity utilization rates to also 80 to 90%. Now, other than that, they're also focused on their increasing their export numbers, and these pertain to geographies like North America and Europe. If you look at the export numbers, that currently makes about 15% of their revenues. So another strong factor is the data centers. So we've all read reports, we've seen the kind of growth that there is in data centers, which currently contribute about 7% of revenue. So how that also plays as a leading indicating factor for the company is something that we should be watching out for. Other than that, we've spoken about these additional capacities. So with these additional capacities, they're also increasing their product offerings, which include bar and plate heat exchangers. But also coming to the thread side, it's important to highlight this also. You spoke about one was the import, the dependence on imports, about 78% coming from some of the key geographies outside. But in the thread side also, they have like 33% of their revenue from single customer, that is Daikin Air Conditioning, and 72% of their revenue from top 10 customers. So high concentration risk from their top 10 customers can be one of the factors that we should be watching out for. But other than that, even their top customers, if they plan to enter into the segment in which KRN is operating, could be one of the threats for the company's performance going forward. So this is the overall picture on the SWOT analysis also that we are seeing.
Absolutely. Well, I really hope that we've given the viewers a very comprehensive look on a very newly listed, very newly minted, listed company out there. Anushi, thank you so much for joining us and giving us those insights around the company KRN Heat Exchangers. So it's something to keep an eye on. Now, at least on the market capitalization basis, it's a relatively small one, but it certainly is one which has gained a lot of traction of late. So continue to watch out for that. In fact, let's take this conversation forward, because we spoke to the management of KRN Heat Exchangers earlier, and we caught up with Santosh Kumar Yadav, the CMD at KRN Heat Exchangers, and here's what he had to say about the company's growth prospects going forward. Listen in.
We already talking maybe before listing and after listing also. So our existing capacity, like we are doing almost 85%. So it's, you can say, almost full. So we like going for 6x expansion, and that's why we receive money from IPOs. Almost full money we are investing on this new expansion and adding new product, also expanding our existing product. So based on that, I think our investor maybe the keen real growth. So that's why, honestly, my side I don't know how we received so good response. But from my side, we are doing a good effort, and we are want to deliver right product to our industry, best product, reliable product, and also we are want to expand our products to North America, Europe, as well as our domestic big OEMs.
Absolutely. Indeed, the market is very much optimistic on the expansion that you've mentioned. It's a 6x jump in the capacities that we are looking at. And this is through your KRN HVAC products that you're seeing. In fact, you've also made an additional stake worth about 236 crore in the company as we speak. Can you expand more about what this arm is? What is it concentrating on? What is its focus products? And the expansion, which is expected to be completed by April 25. More on the timelines and what this is for the company.
So in IPO, of course, we claim 242 crore, but we are expanding slightly more in new entities, 100% subsidiary. So with the expanding our existing, almost double the capacity first go, and then adding new product for refrigerator industry. It's one roll bond, then fin tube, and then wire on tube condenser. Additional to one of the new heat exchanger like bar and plate heat exchanger we are going to add, and we are also like backward integration, our sheet metal parts and header manifolds, that also we are going to add. So in club we call 6x capacity compared to our existing. And then when our target for this new facility, our domestic customer as well as North America customer and Europe side and UAE customer.
So, Mr. Yadav, you've mentioned that by April 25, we are looking to open this new facility, if I'm right, with the additional capex coming in for this. So is it that the additional capacity which is coming from April 25 onwards, what would be the kind of capacity utilization rates that we are looking at? Because if we are to compare it from the previous 1 to 2 financial years, there would be a ramp up that we are looking for in terms of revenues, in terms of orders for the company. So if you can give us perspective on what is the kind of revenues and the order size that one should be looking out for.
No, like current capacity, we are doing almost a best one, but however this new capacity we are targeting to start from April 25th, and then it will take almost 4 to 5 months to settle the process, to hire the new teams and approvals from our customer side. So from my side, I think next year, half year, we will have good production, but for of course half year we will need time from approval from our customer side and set our process and manage the other things.
So can we expect by Q2 or Q3 of next financial year, this additional capacity would be on stream for the company, and from there onwards we can expect the higher orders coming in for the business and the higher revenue that you expect to generate?
Like for our existing product, we have already new customer in our pipelines, and some of customer we already received the approvals, but we unable to start supply because of capacity constraint. So for sure, existing product we will have ramp up very soon, from maybe next second quarter from next financial year. But for new product, of course, we will start with like small OEMs and aftermarket. Then we need some time from approvals from our big OEMs. So as per my opinion, I think next financial year, 2 quarter will be like maybe ramp up plan, and of course next 2 half of the year we will have maybe good production.
And what are the utilization rates that we can expect from these additional capacity?
As of now, our trend is like that, we grow like if available capacity almost 50 to 60%. I think so same stream we will achieve after half year next year. Then we will have almost 50 to 60% each year. We will our target to growth on the same pattern.
So 50 to 60% in next financial year onwards, that you expect?
And we are expecting in next 3 years, start from next year, we can achieve our 80 to 85% of total capacity.
This is for the existing capacity?
No, I'm talking about new capacity only.
Okay, so 80 to 90% of the capacity utilization?
In next 3 years, start from next year.
Okay, great. So from next 3 years, that is the perspective. Now, if you look at the revenues and the margins also, I'll talk about the revenue first. 28% is the growth rate that you've achieved in the second quarter. I want to understand from your sense that is this the level that we should be looking for the next half also? Because next year, as you speak, the additional capacity coming in and all that, so the revenue numbers would look much staggered, much higher than what is anticipated. So I wanted to get your sense for the next half as well as for the next 2 to 3 years.
Next half year, it will be same way because we are on the top of the capacity. And from when our new venture will start, so if we start from 25 to 26 half year, we need like approvals time, and then 25, 26 end of the half year we will have good production, and then we will achieve this. Our new facility will try to consume about 80 to 85%. It's 3 years.
Mr. Yadav, would it be possible to quantify the numbers for us?
I think numbers cannot quantify. Of course, capacity is the 6x, so numbers will be similar that way only.
And on the margin side, 20% is what the margins are currently. So with the additional capacity coming up, what is the kind of margin picture? Would that also remain as the forefront in the 20 to 21%, or can we see further upside also with your planning backward integration, as well as we are looking for higher economies of scale with more of this capacity coming in? So can we expect an upside on this margin numbers?
We are expecting slightly upper side. There will be multiple regions, like we are putting solar plant on the roof of the top. It's almost 8 megawatt. So it means our electricity cost will be less compared to existing. Secondly, we will target export side more, like North America market and Europe market. So our margin is slightly up compared to our domestic. Third, we will have like production side more, and we are doing backward integration also. So if I club is 2-3 regions, then we are able to increase some points compared to existing.
Absolutely. You've mentioned about the growing importance of exports also. Currently about 15% of your revenues come from the export side. So, and you are planning to increase your export opportunities in countries like North America and Europe. Can you emphasize more on the export opportunities and what are the type of products that you're looking for? What is the competition scenario like when on the export side of the business?
Like with the existing fin and tube type heat exchanger, we are trying to, like as of now, last half year, we achieved almost 19% of the export. And for new facility, we will try to at least 50 to 60% to North America and Europe. So there will be also multiple region like North America, they have anti-dumping on Chinese product, particular on our segment, almost 25%. Secondly, now our cost benefit to them is around 10 to 15%. So many customers, they are approaching us, and of course we want to start, but we will start from new facility. So it will like impact to our new facility. Mainly we are targeting to this facility like single piece flow, and we are buying new machinery with latest technology. So this facility will be, you can say, one of the best facility in India with solar plantation, green building, and new technology machine. So of course, North America side and Europe side, the customer need some good facility. And of course, we will invite them and then be able to target to them in well condition.
Absolutely. And Mr. Yadav, with the entry of Trump now as the president for USA, what does this mean for a company like KRN Heat Exchangers? Are we seeing, is it on the positive side? Are we looking at this entry coming in for you? Can you expand more on that front also?
My personal opinion, I think Trump is better on our product. If I had like experience on last, so he put like anti-dumping on Chinese product. So if they want to, we want to like compete with Chinese products. So for as a Indian supplier, particularly in heat exchanger, so I like look seems like a positive side, of course. But I am, I think he putting duty on Mexico. So Mexico also one another place. They are like targeting to USA market on cheap products. So it's also good news on our product. But I feel if he will put some anti-dumping on our product, but it will be less compared to Chinese. So I think it will be better for us.
Okay, so a positive side that we are looking for this announcement. Now, I want to understand from you, what's the road ahead? You've mentioned about the capacity expansion that is happening, the new products that would be in focus post this. But for an investor, if he wants to look at the next 2 to 3 year picture for KRN, what are the 3 important metrics that one should be considering when looking at the company as a business perspective? And what are 1 to 2 points according to you, which can also be as the challenges for the business that we can point out? So it's on the basis of what are the goods and the good and the bad that one can look out for KRN.
So good side, if anybody like study our history, so I'm like first generation entrepreneur only. So we started 6 years back only. And we, like in the last 6 years, each year we bought new plot, we are expanding our capacity and we target big OEMs and we succeed on that the same. So based on that, now we are going for 6x capacity, and this, you can say like my old facility, I can say it's the optimized facility, but now we receive good money, and based on that we are targeting one of the best facility in the world for our product. And then we have like same trend we will going to achieve in future as well. So that's why we're expanding 6x capacity, which really is from my side, I receive an inquiry from like my customers. So they need such type capacity in India. So based on that, we design our facility, and of course we are targeting to them, and they are like some customer already visited us, and of course they really appreciate on us. A negative side from my side, I think there is nothing from my product. Of course, force major is there, and some government policy like BIS certification on the import material they are putting, and that other side like Trump or maybe Chinese, some policy will change, so maybe they will put some anti-dumping. Right. So that I feel negative side, but the rest all is positive side.
Well, that's some very interesting commentary coming out from the management of KRN Heat Exchangers. We've also spoken about the kind of traction that some potential tariff hikes from the US could impact the company, and the management seems to suggest that they're not immune to it, but it'll be less as compared to several other competitors across the world. But as you can see, at least in terms of how the company has done so far, it's a 6 out of 6 in terms of the parameters that we spoke about. Of course, with that, we are also at the end of this edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit, and we will keep bringing you more.